Hello, investors. Welcome to AI Insights US Stocks. I'm your Chief AI Analyst. This show is for educational purposes only and does not constitute investment advice. Investing involves risk. Please trade with caution. Today is December 2nd, 2025, and in just a few minutes, we'll break down everything that moved the stock markets. The market bounced back with a vengeance today, led by a surge in tech and crypto. But a stark warning from a household giant is making everyone ask the question, how long can this party last? Let's dive in.
So, after snapping a 5-day winning streak on Monday, the markets decided to turn things right back around. We saw a really broad-based recovery that pulled all the major indexes firmly into the green. Take a look at this chart. The Dow Jones Industrial Average finished up 0.4%, the S&P 500 gained 0.3%, and you can see the tech-heavy Nasdaq really led the charge, climbing 0.6%, a really solid turnaround from that downbeat start to the month.
And that really sums up the mood, doesn't it? What we saw on Monday was traders getting a bit nervous, pulling back, taking risk off the table. But today, well, that caution was basically thrown to the wind as investors jumped right back into some of the market's most exciting sectors.
So what were the main drivers behind today's rebound? Well, the rally was really powered by some huge single stock movements, starting with one of the biggest names in American industry.
Take a look at that number. A 10% surge for a blue-chip giant like this is a really big deal. That massive gain belongs to Boeing, which ended up as a top performer in both the S&P 500 and the Dow. So what on earth was the catalyst for a move this big?
It all came down to some comments from their CFO, Jay Malav. He was speaking at a conference and signaled some serious confidence that deliveries for their key 737 and 787 planes would ramp up in 2026. He also said the company expects to generate positive free cash flow next year. That was exactly the good news the market was hungry for, and the stock just took off.
And, Boeing wasn't flying solo today. Take a look at this chart of today's tech rally. It was a fantastic day for the sector. Intel jumped an impressive 9%. Database software maker MongoDB absolutely soared, up 22% after crushing earnings estimates. Credo Tech also popped 10% for the same reason. And of course, AI giant Nvidia tacked on another percent, just continuing its incredible run.
But it wasn't all clear skies and soaring stocks today. While tech and industrials were popping the champagne, a very different and much more cautious story was unfolding in the consumer sector, and it raised some serious red flags.
Now, this quote is particularly significant because of where it came from. This wasn't just some market analyst speculating. No, this warning came directly from the finance chief of Procter Gamble, one of the largest consumer goods companies on the planet.
Right, so Procter & Gamble's CFO, Andre Schulten, he told an audience that the U.S. consumer is getting nervous, and he pointed out that sales in October were down significantly in both volume and value. You can imagine the market's reaction. Those comments sent P&G stock down to a 2-year low, finishing the day off by 1.1%. This really creates a clear tension in the market story right now.
Okay, let's switch gears to another part of the market that saw a wild swing today, cryptocurrencies. After a really rough Monday, Bitcoin came roaring back in a big way.
Just look at this recovery. Yesterday, Bitcoin suffered its worst daily drop since March. Overnight, it actually dipped below $85,500. But by the end of the U.S. trading day, it was right back up there, trading near $91,000. I mean, what a comeback. And this dramatic bounce lifted pretty much all the crypto-related stocks right along with it.
But the Bitcoin rebound wasn't the only big crypto story making waves today. We also got some really interesting news from MicroStrategy, the largest corporate holder of Bitcoin, that seemed to indicate a potential shift in its famous hold-at-all-costs philosophy.
Yeah, this is pretty fascinating. For years, the executive chairman Michael Saylor has been the ultimate Bitcoin evangelist, famous for his stance that they would basically hold forever. But now, the CEO, Phong Le, has come out and said that the company would actually consider selling, but only under certain conditions, specifically if the value of their stock fell below the value of their Bitcoin holdings. It's a really pragmatic and kind of surprising shift in tone.
And here's where it gets even more interesting. Even as the CEO was talking about the logic of a potential sale, the company announced it had just purchased even more Bitcoin, bringing its total holdings to a massive 650,000 coins. So talk about mixed signals, right? So with all these competing signals, we've got strong tech, a weak consumer, volatile crypto. What are investors looking at next to try and make sense of it all?
One key area of focus is, of course, the AI trade, which has seen some choppy sentiment lately. But according to Wells Fargo's chief equity strategist, while things are volatile, we're not in bubble territory just yet. He expects AI earnings to stay strong, which could continue to power this market even higher. That's a perspective we're watching very closely.
And of course, all eyes are on the Federal Reserve. Take a look at this chart. According to the CME FedWatch tool, the market is overwhelmingly betting on a rate cut at the December 10th meeting. We're talking traders pricing in a nearly 89% probability. That conviction is definitely helping to fuel some of the optimism we're seeing right now.
And that really leaves us with the big question for the rest of the year. Will the sheer strength in tech and AI win out? Or will the weakness in the consumer pull everything back down? That's the tug-of-war we'll all be watching. Quick takeaway? The market showed renewed strength in risk-on assets, but a warning from a consumer giant injects a heavy dose of caution. Drop your thoughts in the comments. See you in the next episode.